watching CNBC-TV18.
Stocks trade ranged near critical levels amid growing concerns over high inflation and slowing growth. Auto and consumer discretionary stocks gain while metals and energy drag.
The Vedanta stock dips after dollar bonds of parent Vedanta Resources takes a beating on concerns over its repayment ability given the government's opposition to the sale of select assets to Hindustan Zinc.
Zee Entertainment gains after the NSE puts it back on the F&O list. A move by City Networks to move forward on its debt resolution is also read positively.
Cipla slips following US FDA's 8 observations on its Pithampur facility, which is likely to push back the launch of its key respiratory drug, Advair generic.
Adani Enterprises sees wild intraday swings from losses to gains, even as several other group stocks like Adani Green, Adani Transmission and Adani Total Gas continue to get battered.
Good afternoon. Welcome to Halftime Report. I'm Sonia Shenoy. With me is Ekta Batra and Mangalam Malu. Very, very quiet, uninspiring and insipid market at the moment. No recovery at all after what we saw yesterday. And, still a tad bit above the budget day lows, but nevertheless, no recovery after 7 or 8 days of a fall in the market. In fact, the mid-caps are seeing a little bit of a bump up, and there are a few stocks. Adani Group stocks have recovered from the lows. Auto stocks are up ahead of the sales tomorrow. But largely, you'd have to say the mood is not exceptionally buoyant. It leaves a lot to be desired, I guess.
Well, it leaves a lot to be desired, but at the same time, there is a lot which is happening beneath the surface. You know, from the frontline end of things, yes, the Nifty is around that 200-day moving average. The Nifty bank to holding on to the recovery that it saw yesterday. But the mid-cap end of things, it's outperforming today. We have the mid-cap index up around 0.6%. And some of these stocks are doing extremely well. Something like Uflex, which was underperforming, JSW Energy. We have Rate Gain, which is up around 6% as well. But a bunch of stocks also declining. Case in point, something like Paytm down 8%. SpiceJet, after a bump up yesterday, down about 6.5% today as well. And Olectra Green Tech saw a big move over the last few trading sessions because of the green hydrogen buses. Now, that one's coming in for some profit taking as well, down 5%.
Yes, absolutely. So I think it's a lot about stock-specific action, and at least in the near term for the Nifty, the support would probably be at around 17,300 or 17,299, which was the intraday low yesterday. So let's see whether that is managed in terms of a protection or a support for the Nifty. But nonetheless, consolidation is the name of the game. We have a lot of stocks in focus today. Sadly, we have Cipla, Dr. Reddy's, both down and out from the Nifty space in the pharmaceutical segment, but even others such as Vedanta, Paytm, Bajaj Auto, for example, is managing to hold up after what was quite a dismal day yesterday. So a lot of stocks to discuss in the next 60-odd minutes. Let's start with Vedanta, which is in focus. It is sluggish in trade as yields on the parent Vedanta Resources bonds have surged. Nigel is here with the reason why. Nigel.
Well, let's run you through the key data points. What's plaguing Vedanta Limited? That's the Indian listed entity. The fear is that Vedanta Resources, which is the parent, could potentially default. And that fear has come about because the yields on the bonds that are traded, they have moved up to around 35 to around 40% approximately. So that's the fear out there. And in the first half of this fiscal, that's FY24, they have maturities of close to around $900 million. So that's the fear out there. The second factor is, how does it impact the listed entity? Well, Vedanta Resources, that holds stake in Vedanta Limited, and the promoter entity comes up for you. The holding is large. The problem is most of it is pledged. So if in case the shares fall, the fear is that in fact, it could trigger some bit of selling. That isn't the case as of now, but that's the fear as we speak. So that's why, the stock is under pressure. Thirdly, the big, the most important trigger was Hindustan Zinc goes ahead and buys Vedanta's international zinc business for around $3 billion. Now, the government of India has, opposed this. So that $3 billion deal goes out of the window. Can they come up with some kind of solution where you get the cash out of Hindustan Zinc's books into Vedanta Limited and they in turn pay the money to the promoter entity? That's something we'll have to see. But for the time being, the fear is that Vedanta Resources, the promoter entity, could potentially default, which is further putting pressure on Vedanta Limited stock price. But I've seen this in the past, in the last many years, and somehow or the other, the promoter entity wriggles its way out of it. So let's see what cards they have up their sleeve, whether it's a refinance, whether it's pulling out some cash from Hindustan Zinc. We'll have to stay tuned, but that's the fear that's playing out.
Okay, thanks a lot for that. For now, the street is not convinced, down almost about 7.5%. But moving on, Z Entertainment is surging in trade as the exclusion of the stock from the F&O segment stands withdrawn by the exchanges. Vivek is here with details on that. Vivek, over to you.
Well, absolutely. Z Entertainment, a technical positive as far as this name is concerned. So on February 23, NCLT had admitted Z Entertainment under the IBC, and on the same day, NSE had said that, May series onwards, Z Entertainment would be excluded from the F&O trading segment. However, the NCLT gave a relief as far as he is concerned, and yesterday, post-market hours, there was a notification to the exchanges where NSE withdrew that circular. Two important developments for Z that needs to be tracked. In the earlier circular, May series onwards, there would be no fresh contracts. And the second one was requirement of 100% margin upfront payment that was required. So given the fact that both of these now stands withdrawn, it's a technical positive as far as Z is concerned, and no wonder the stock is doing very well in today's trading session.
All right, Vivek, thanks a lot for that. Meanwhile, just keep an eye out on Berger Paints. That stock's moved to the high point of trade. Remember, the management joined us on CNBC-TV18 yesterday, indicating that they would see double-digit growth in the fourth quarter, and that continues in FY24 as well. So as a result of which, there is some buoyancy in that stock, up around 2.9%, 16 odd rupees in absolute terms. But the other stock on our radar, Vesuvius, is the one that tanks in trade on the back of slowing revenue as well as margins in the fourth quarter of calendar 2022. Nigel?
Well, that's right. If you look at it on a year-on-year basis, the numbers look good. The problem is there is a degrowth on the top line, both on a on a sequential basis, a bit of a degrowth that we've seen out there by close to around 5 crores odd, and on the EBITDA front, there's a big degrowth. So that's why the street is a little bit nervous out there. And the margins that were in mid-teens, 14% in the previous quarter, they've come down to around 11%. So on a year-on-year basis, it looks good, but still, in fact, on a sequential basis, it's lower, which is a little bit disappointing. The other news was that they appointed a new CFO who has an investment banking background, but that's failed to enthuse the street at least as of now. The valuation picture should come up for you. The stock trades at around 29-30 times its trailing earnings. So valuation concerns, point number one. The second factor is you just pull up a 1 month chart. Even after this 11% cut, the stock is down only around 1%. That means in the run up to this, to these results, the stock, in fact, was up close to around 10%. So it's some profit taking, high valuations, and margin disappointment. The three factors that explain why the stock is under pressure.
Okay, all right, Nigel. Thanks very much for that. So that stock is down around 10.5% odd. For the markets just about consolidating, we have the mid-cap index, which is up around 0.5% odd, and an advanced decline ratio, which you'd have to say is currently even keel. We'll take a short break. On the other side, we'll put the focus on stocks such as Cipla as well as Indiabulls Realty, which are making news. Welcome back. Well, for the mid-cap index, it's up around 0.5%. So that's the only index which is really holding its head above the water. Just watch out for Paytm because now it's at the low point of the day, down around 8.5% odd. The intraday chart will tell you there's been a sudden dip which has taken place in that particular counter, as you can see at the low point of the day as we speak for Paytm. But let's move on to other stocks then. Indiabulls Real Estate is also under pressure. This is following some key leadership changes which have taken place. Nimesh is here with the story. He gets us more.
The stock is down 5%. I'm surprised, the market has taken this news negatively. But first, for the news, the company has announced that there has been a change of management at the top end. So the current MD has resigned, which is Mehul Johnson, and he'll be replaced by Sachin Shah, who will be the ED for the next 5 years. Apart from that, additionally, they have also appointed 3 independent directors on the board for the period of 3 years. Now, to read this, it effectively means that there will be further control in the hands of Embassy. Remember, Embassy and Indiabulls Housing, Indiabulls Real Estate is looking to merge, and that NCLT order is pending. The next NCLT hearing for this merger is scheduled for tomorrow, which is March 1st. So that will be important to track. But in the fresh development, there's been a change of guard in terms of top management. The current MD resigns, and most of the new board is largely appointed by Embassy. So the control goes largely in favor of Embassy going forward, and the next trigger will be the NCLT approval for the merger.
Okay, all right, Nimesh. Well, that is on Indiabulls Real Estate. But the other stock, which is in fact dragging, is Cipla from the Nifty space. It is down around 2.5%. odd. And the reason is that the details of the Form 483, which are these 8 observations which were issued to its Pithampur facility, have now become public. Now, the street is fearing that these observations are not going to be easy to resolve. So, for example, there are not expected to be data integrity observations within the 8 observations. That's the assessment as of now. But they are still complex issues, which is going to take them time to resolve. When it says time to resolve, then that means that there could be a possibility of a re-inspection from the US drug regulator, as well as an escalation to an official action indicated status, which means that new drug approvals could probably get impacted. When you talk about new drug approvals from this particular plant, the one that the street will be focusing on is Advair generic, which is an inhaler. Now, that was slated to be launched probably by Q1 of FY24. Because these observations will take time to resolve, that means that this particular drug is probably going to get pushed further in terms of a launch. It's estimated to be around 5% of EPS for FY24 as well as FY25. Overall, the plant is also important. There are respiratory as well as oral products which are filed from this facility. It is 25% or 20% of sales approximately on an FY20, 20% of EBITDA. On an FY23 basis, and hence the overall importance of the plant is also significant. So the street is probably bracing for the worst when it comes to this particular facility.
Okay, and that's why the stock is down almost 2.5%. But let's do one thing. Let's take a quick commercial break. On that note, on the other side, Sachidanand Uttekar will be joining in with some trading strategies. Do stay tuned in.
Well, if the Nifty was a traffic signal, it would have been pretty apt for today because it's moving red and green, red and green. You have the Nifty now mildly in the green. You have the mid-cap index, which is doing extremely well in this afternoon, and that gives bulls some support that maybe, there is support at the lower levels for the frontline indices, and as a result of which you can go out and play those mid-caps itself. The Nifty 200-day moving average, that's the mark that we have to watch out for, because that's the mark which, everyone believes could stand firm in, as a support in the near future. We saw it breach yesterday at an intraday level, but then again, it recovered to cross and close above that as well. For the Nifty Bank, the low that it hit yesterday is a formidable support now, primarily because it's also close to the 10% dip from the highs, and usually that 10% dip from the highs gets bought into, and as a result of which that recovery which we saw yesterday is sustaining. What are the broader range markers that we're looking at for this week? 17,500 call, almost 50 lakh shares added for a premium of 30 odd rupees, and 17,300 put at the lower level has seen almost 20 lakh shares being added for 50 rupees. So the broader range that everyone's looking at is 17,250 to 17,550. That also coincides with the 17,400 straddle which everyone's writing. What's a straddle? A call and a put. If you write the 17,400 call and a 17,400 put, you will pocket a premium of 150 rupees. Again, the range that you're playing for, 150 on either side of 17,400, which is 17,250 to 17,550. The only fly in the ointment, however, is the Fin Nifty expiry today. So let's see how that pans out. Could there be some sort of volatility on account of this expiry? And if there was to be, it would be through the HDFC Twins and Bajaj Finance.
Okay, all right, Mangalam. Well, for the Bank Nifty right now, there's a bit of consolidation which is taking place, and the Bank Nifty coolly above 40,300. So that's where the levels are. Sachidanand Uttekar of Trade Bulls joins in now to discuss what he's tracking technically today. Hi, Sachidanand. Welcome to the show. Well, the key point is, what would your strategy be on financials at this point? Bank Nifty is consolidating, stock specific as well as for the Bank Nifty.
Good afternoon, Ekta. I think clearly both the indices are in a consolidation mode. But if you look at Bank Nifty, it is one shade better. In fact, the way it recovered yesterday from its 200-day exponential moving average and established a closing above this particular level of 40,000, I think that particular move itself was very commendable. The immediate hurdle for this particular index is somewhere close to 40,400. The moment we see it, surpassing it, we may see a very strong short covering rally which can unfold. So we are optimistic when it comes to Bank Nifty until unless it holds above that 40,000 mark. And on the higher side, there is an expectation that once the breakout is established above 40,400, the rally may continue towards 40,750 to 40,900 itself. So I think the bias when it comes to some of the financials, it clearly remains on the positive side. But when we look at Nifty, despite of the fact that yesterday we saw a bullish hammer formation on its daily scale, the index has still not been able to surpass above its previous day swing high, which is somewhere close to 17,450, 455. So until unless we don't see a breakout above that, it will be prudent to continue with some of the short positions here from an intraday perspective. The oscillation within this particular range of 17,450 to 17,350 may continue during the day, as ICICI and ICICI, ITC and Reliance Industries are still under pressure. So probably it is a prudent strategy to go long in banks and stay put in when it comes to Nifty.
All right, prudent strategy to stay long in banks and maybe right puts on the other parts. Sachi, thank you so much for joining in and giving us that view. Individual stocks, what do you have for us?
Mangalam, I think if you look at today's price action itself, MCX is one particular counter that has been buzzing since the beginning of the day. If you look at the broader structure, we are seeing a classic broadening formation base getting revisited. And from that base itself, we have seen an elevated move. So the way it has surpassed the 1400 mark, probably we may see a very strong pullback rally getting unfolded here. And that's why we have recommended this stock to our clients as well. So we are expecting this particular move in MCX to extend towards 1530. Still long positions should be considered. The stop loss from here on should be placed at around 1390 on the lower side, and fresh longs from a positional perspective for a price target of around 1530.
All right, Sachi, thank you so much for joining in and giving us your views on the index and individual stocks. With that, let's talk about an important thing that happens tomorrow, which is the first of a new month. And every time that happens, we have the auto sales data for the previous month. And it is auto sales data for February, which will be due tomorrow. Sonia joins in to decode the key trends for the auto space that one should watch out for. Sonia.
Well, the month of February has seen some large trends emerge in the auto space, and I'm here to tell you all about that. Let's start with the commercial vehicle space, which could see good growth in the month of February. Now, dealer surveys indicate that there is pre-buying for commercial vehicles as prices are likely to rise by 3 to 4% from April of this year, post the implementation of the real driving emission norms. Now, this could lead to a 15 to 20% growth for CV makers in February, the likes of Ashok Leyland. The other big trend that we're noticing is the risk of poor monsoon and El Nino, which could hit the rural market. Now, this could impact entry segment cars, two-wheelers and tractors demand, and that could affect growth for companies like Maruti Suzuki, Hero MotoCorp and M&M the most. If we look at the two-wheeler space, the pattern has been pretty similar for a while. Two-wheeler wholesales continue to be weak, and volumes are expected to remain down 28% to 30% lower from the peak that we saw of Jan of 2018. Remember, two-wheeler exporters like Bajaj Auto have spoken about steep production cuts due to an export slowdown. So, that is the expectation that we have. And finally, expectations of further price hikes from April 2023 as new emission norms kick in could dampen demand for passenger vehicle players too. Nomura put out a note where they said that even luxury car sales have declined 20% year-on-year in February, suggesting initial signs of a slowdown. So there's a table that will come up for you to give you an indication of which way things are heading for individual companies. We've broken it up into a couple of parts. First, of course, is the passenger vehicle companies, Maruti and M&M. As you can see, there's not too much of a growth for Maruti Suzuki, while for M&M, the growth has been pretty good because of the new launches that they've had. We follow that up with the commercial vehicle space, where, as I said, there's going to be a decent amount of growth for all three players, considering that CV sales are expected to rise given the pre-buying. And then you have the ailing two-wheeler sector, where, as you can see, just for Hero MotoCorp, there's a bit of a growth, but the rest of the lot, it has been under quite a bit of pressure, particularly Bajaj and TVS Motor, where the growth has not been much. In fact, there's a steep fall for Bajaj Auto because of the production cuts that I mentioned. Finally, Royal Enfield, the growth has been good. The premium end of the market has been doing better, as we know, and hence Royal Enfield is a big beneficiary of that. Back to you.
Okay, all right, Sonia, thanks very much for that. That's on the entire auto space and the expectations. We need to take a short break. On the other side, we'll be connecting with Mr. Kumar, who's the CMD of RailTel Corporation of India, for an outlook on their business. Stay tuned.
Welcome back. As promised, we're going to talk about RailTel Corporation of India. The Indian Railways has been allocated a capital outlay of 2.4 lakh crore rupees in the union budget. And RailTel has seen increased competitive intensity in its project business, both from the government entities and private companies. To discuss what the way forward is, we are joined by Sanjay Kumar, the Chairman and Managing Director of RailTel Corporation of India. Sanjay, thanks a lot for joining in. You know, first I want to understand what the situation is, right? Before we get into the key numbers. There's, of course, this big thrust from the government in terms of increasing rail capex. But on the other hand, there is quite a bit of competitive intensity right now. In fact, for your own business as well, your EBITDA margins were sharply lower in the quarter gone by. Of course, there were some provisions that you made, so I'm not sure if that was a one-off. But tell us a little bit about how you expect the way forward to look like, both in terms of order book, what you expect from the government to come through, and how are you handling this competition?
Yeah, so thank you, Sonia, for giving a backdrop. Regarding the EBITDA numbers you said, so yes, there is some difference due to the provisioning which we have done, which is around 39 CR this year. So this is actually is a momentary figure which comes into our statement, and then once we realize it, so most of it is kind of we will realize it, so it will make us better. But yes, there is pressure on margins, and there's competition heating up in the market also because of huge digitization opportunities there. New companies are also joining in, and market is, yes, hot. So we are, of course, we need to have new projects, new orders. So we have to adjust our margins also, so that we continue to win, and then make our absolute numbers also growing at the same pace, at least not higher.
Okay.
Yeah. So now regarding railways budget, you said railways is a huge organization, and Railtel is doing few good projects for them, like video surveillance system at 6,000 railway stations, which is now already started. So next year we'll be busy in doing this project, and of course this year also we'll get some revenue booking from this project. Okay. Another project is video surveillance in 14,000 coaches, and the RFP for that already been invited and is due for submission very shortly. So next year we'll be busy in doing these two projects in railways. Other than that, we are already getting...
Mr. Kumar, yeah. You know, I just wanted to come in and ask you about the new project business revenue guidance. Are you on track to achieve the guidance that you had provided at around 800 odd crores? 9 months, you're down 405 crores. You were guiding the market for around 400 crores in Q4 itself to achieve that guidance of 800 crores for the year. Are you on track?
Yeah, we are on track for this year. And next year, we'll be doing certainly much better, because this semiconductor chips issue is now getting subsided, marginalized.
So right. What would it go to next year if you achieve 800 crores this year in terms of incremental business, in terms of new project? Yeah.
We are around not less than 1,200 to 1,300 CR next year from project.
All right, not less than 1,200 to 1,500 CR. You know, if you could tell us a little about the new structural problem that may come, which is, earlier you enjoyed advantage due to exclusive access to the railway infrastructure. Now railway has opened this infrastructure sharing to private players. There could be some competition. I mean, you know, if say 100 crore rupees worth railway orders were awarded earlier, how much went to private players, how much came to you? And now with this opening up, what does that pool stand at?
There are two, this is two parts. So one is opening up of railway infrastructure to private parties also, and then right of way also being permitted to any other organization, any other telco. So Railtel has already established its strong 61,000 plus kilometer optical fiber network along the railway track, and it's not so easy to establish such a huge network in any short time, or maybe even 4, 5 years, 8 years timeline from now. So I don't see any challenge on that account. Regarding infrastructure, other infrastructure like land, which is the other infrastructure I take. So I again don't see any challenge there also, because we have better access to railway offices. We are already working. We have been there, and most of our cadre also come from railways.
Okay.
So we still have an upper hand, and I don't see any challenge. So this is on the infrastructure opening to public. The other side you said about the business coming from railway. So business coming from railway is already there. We are not getting now any more business from railways on nomination basis. We have to compete in the market, and we find ourselves competitive. We have competitive advantage in
just one last question, Mr. Kumar. We are running out of time. If you can give me one number, this 400 crores, do you think you can do that much in terms of new project business in Q4? And what is the order guidance that you have for FY24 as well? I didn't get that number.
New orders you are talking?
Yes,
or,
the new orders.
Orders should not be less than 1500 CR new orders coming in, at least. That is, I would say, a very conservative number from my perspective, the way I see the market. And this Q4 number, I'm sure that I'll be closing it somewhere around 400 from projects.
All right, so we're going to leave it on that note. Thanks very much for joining in and speaking with us. So quite optimistic in terms of order inflow. That's RealTel. Stock is down around 7% in the past 1 month, holding up well today with a gain of around 2.5%. Take a short break. On the other side, more stocks, more markets.
Welcome back. Joining us on the show now is Siraj Hussain. He's former Agri Secchi, also advisor to FICCI. Mr. Hussain, thank you so much. It really is a tale of two worlds where you have onion in India selling at 2 rupees per kg. Philippines is reporting that they are selling onions at 1200 rupees per kg, and various other countries clearly facing the brunt of lower or shortage of availability there. But talking about India really, and the heat wave clearly has had an impact here as well, where we have seen the Kharif and the late Kharif crop come into the market suddenly in a bunched up way. What is your sense on the kind of price move that we've seen, the availability, and what the government has taken as an initial steps?
Thank you, Manisha. See, there are two things. The government has the mechanism to purchase onion when the prices have fallen so low, because the prices will surely rise when we are into the monsoon season. So, price stabilization fund is available with the government. Unfortunately, the allocation for MIS scheme and price support scheme has been reduced to just a token allocation of 1 lakh, but about 5 crores is available with the government, I am told, under price stabilization fund. So the government can purchase and store onion and then release it in the market when the prices are higher. But there is another point I would like to make, because your viewers keep hearing about technology, startups, VC funding and so on. So far, we have not seen any technological breakthrough in the storage of onion. And therefore, the storage of onion continues to be not based on very highly scientific lines. So you have to ask, why is it that we have not been able to develop a proper storage system for onion?
Clearly. The other thing also has been about, this is various protests that are now happening in Maharashtra with farmers, one asking for NAFED to start procuring, which we do understand has begun now. NAFED will be buying from Maharashtra and selling in Delhi. The other thing is fixing a floor price at around 1,000 rupees a quintal. Do you see a viability of that?
See, this has been the farmers' demand. One of the main demands of farmers' agitation was fixation of a minimum price below which trading cannot take place. But there are difficulties in that. However, whether we are able to do it or not, there has to be some mechanism for preventing the kind of fluctuation we are seeing now. And I only wish South Asia was more integrated. You talked about the prices in Philippines, but the prices in Pakistan are about 320 rupees a kilogram in their rupee. Right. Which translates to some 102 rupees a kilogram in our rupee. So obviously, if the trade was open, their consumers would have benefited, our farmers would have benefited.
Clearly. The other thing also is about non-traditional states now growing more onion, because while clearly Maharashtra has been a major chunk, 40% of onion comes in from Maharashtra, but there are reports on how MP, Gujarat, Haryana also have some onion, and all of these states have been looking at sowing more onion. How do you look at that pattern?
Actually, Madhya Pradesh has done a very good job because Madhya Pradesh, a lot of area is now devoted to onion. So the farmers have seen that they can realize a better price in onion. In many years, they have realized better prices. So now the prices have crashed because of this heat. So there is no solution as such. The farmers keep moving from one crop to another crop in the hope that the prices will not crash. So hopefully, and then you have the government intervention when the prices are higher. So I am already writing an article on wheat.
Okay. You talked about technology. You also talked about warehousing, and that perhaps is a more concerning part, because while we've seen potato also come in abundance, but there are cold storages and there are already allocated storages or warehouse space in sense of potato. Nothing for onion. In a sense of more directional, structural way going forward in onion, is there something that you would advise?
I do not have any specific advice to offer except for a technological breakthrough in storage. We have seen that breakthrough coming in case of apples, for example, where CA storages have prolonged the time and the availability of apples in the open market. So similar kind of technological intervention we have been hoping, even though I must say that the farmers in Maharashtra and some other states have created storage capacity out of various schemes of the government. So RKVY, for example, facilitated creation of storage, and that is why the farmers now store Kharif and late Kharif onion in the hope of realizing a better price.
All right, so it has to do with technology, better warehousing, and also fixing a floor price, which wouldn't really, lead the farmers down to protest, and closing of mandi, as we've heard in Maharashtra. I mean, these things keep happening on after every few years when we see higher onion production and coming it in bunches in markets. And then, of course, as Mr. Hussain said, that by monsoons, you'll have a shortage of that also. So it's a cycle there, and it's something that we could really take care of. Thank you so much, Mr. Hussain, for joining us. And that's all the time that we have on the show. But after the break, Business Lunch will take all the action forward.